For 6 months, Bitcoin has fallen off a cliff. Gold and silver have followed suit, falling since late January, coming up to 3 months. Now, all of these so called safe havens during a time of crisis and unaffordable goods for the everyday consumer, one would expect that they were going to increase. This is where the majority of retail have been chucking their money: gold, silver, Bitcoin. Now, of course, there is also the stock side of things, but today let's focus on Bitcoin and the metals as we continue to see them fall off a cliff, in particular Bitcoin, but I'll also cover silver and gold. Now, it sounds like a bit of a doomer thing, but I want to stress the importance of what the charts are showing, and you can make up your own mind. At the end of the day, you have your own mouse, you click your buttons, you want to buy and sell, totally up to you. I'm just giving you the data and what I'm seeing in the charts, my opinions based on that data. Hit the like button, subscribe to the channel if you're new here. Let's kick it off looking at Bitcoin and more data that shows Bitcoin falling off a cliff. Now, I do want to give a little bit of hopium in the video because all too often it's just about the bear market and prices heading lower and waiting to see this transition from the bear to the bull. And so each of these times that we see the indicators continue to fall and dive into new lows, as I'll show you today, it brings us one step closer to the end of the bear market and the hopeful bull market, and for the permabulls, hopefully a much needed hundreds of a percent gain to get back from many of the losses on the way down. If that doesn't make sense, I'll explain it to you in today's video. So first things first, let's take a look at Bitcoin on the short-term time frame, and I'll build it out into the bigger time frame here. We've had a couple more days rejected off the 50% level at $79,000. 50% is of the range that we saw from the collapse in January to February, basically that huge move that the bulls weren't expecting, and it collapsed 38.75%, nearly $38,000 in that one move. Since then, we've seen the market slowly, steadily climb back, now getting rejected multiple times at the 50%. So that's not a good sign for the macro. It's not a good sign that the low is in yet, but there is always a possibility that we do see slightly higher prices. You can see here on the yellow lines that I have drawn. And one in particular is that we see a push above the 50%, so above 79K, above the $80,000 level, to finally test the 200-day moving average in this bear market. That happens every other bear market. There's always at least one test of the 200-day moving average, like we saw in 2022. You see it hit pretty early on in the piece and then get very heavily rejected. In 2017, couple of tests, all of which failed. 1, 2, 3, getting awfully close here, but then it failed. And the data for 2014, again, same sort of thing. There was multiple failures in 2014, got up to it, slightly above, held above for a little bit, but just could not get the follow through, nor could it break the prior high that broke through. So ultimately, you get the breakdown and the failure overall of the 200-day moving average. And notice something with each of the cycles. They continue to get weaker. 200-day, it tests, holds a little here, and then falls. The next cycle does not hold at all, tests and fails. At least it got there a couple of times. And then in 2022, one test, fail. So it was pretty weak by 2022. Now we find ourselves in 2026, and there hasn't even been a test of the 200-day yet. And this has been part of the ever-increasing evidence of, well, at least the data, and we'll assume if it's going to be evidence in the future, right? Ever-increasing amount of data that suggests the cycles are getting weaker. This is not a thing about diminished returns, although there are diminished returns for Bitcoin. It's mostly about the strength of the overall moves for Bitcoin. So that's something that I'm concerned about longer term for Bitcoin, which is why I keep coming back to it and have it in the back of my mind for when a low forms, for when we see a transition, for when there's a time to invest more heavily again, as opposed to trading. So short-term trading has been good here. But the longer term, the jury's still out on it because we haven't seen those macro changes. And the the long term time frame, the highest time frames here, have all suggested over the last 12, 13 years, Bitcoin has continued to get weaker each cycle. It's not a matter of diminishing returns. As I said, that is true too. There have been diminishing returns, but overall, it's become a lot weaker. Now, the sentiment, another important piece of the puzzle for Bitcoin's transition from a bear to a bull is search volume. 5-year search volume falling off a cliff. I mean, you can label it any which way you want. And my opinion, of course, is that it's falling off a cliff. You could say, objectively speaking, the data is at new lows. That is objectively speaking. You can see it's at 17 in the search volume for Bitcoin. It's lower than any time through January. It's lower than the tops around July of 2025. It's at similar prices, similar search volume to where it was. I mean, it's lower now, but similar, let's call it, to the lows of the Liberation Day low. And we have to go all the way back to October 2024, September, October 2024 to get similar sort of search volume. Now, there's always the hope that the search volume has shifted to other mediums, and that was talked a lot about 12 months ago. All the search volume's gone to ChatGPT and so on, but those people have died out, as they often do, with some sort of new narrative as to why particular data is no longer relevant. Yet again, I think it's showing the case and the cause why this thing is still very, very relevant. And of course, Google is now caught up in the AI search volume as well. They've got Google AI, they've got Gemini, it's basically the same thing. Apple's using Google's AI as well because Apple's AI is rubbish. So there's still plenty of search volume coming through Google where they can extract that data and present it to us on this chart. So objectively speaking, something we can't dispute, it's fact, search volume has fallen off a cliff. You could objectify that, what I'm calling it as a falling off a cliff. Maybe you would just say, well, it's at new lows. Either way, that is a very, very steep decline for Bitcoin from the peaks that we've seen throughout the bull market top and the low points of February, low points of November, and like I said, just those all-time highs in July, August, and of course October was quite low. Taking a look at it on the 12-month though, it's not a great sign either. These are very close to 12-month lows. Look at that, Bitcoin at 26, crypto at 12, Bitcoin at 27 back in July, and 28. So new 12-month lows in search volume for Bitcoin. And if Bitcoin's not being searched, well, then crypto is obviously going to go down as well. There's 12. You can see basically exactly the same lows here. So Bitcoin new low and crypto search volume is at an equal low. I dare say it'll eventually go lower than where it currently is. New lows, or very close to falling off a cliff, is the exchange volume. Now, I show you this. I know it's a bit of a doomer FUD thing, whatever. The point is, we need to see all of these metrics turn around to get to the transition from a bear to a bull. It's not going to just happen on a one-day event where you see Bitcoin's price shoot up astronomically and everything is saved. If you do get one of those God days, those God candles, as it's called in the industry, very often it will be met by selling. The most famous day of a shoot higher and then basically completely rejected was Trump's inauguration. You can see the date at the bottom of the chart here, 20th of January, 2025. Trump launches a meme coin on the weekend. Then we get the president inaugurated on the 20th, shoots up, new all-time high, marginal, very, very marginal from December's top, which we noted on the channel after our 3-day down signal. You guys might recall that. That told us that there was very likely going to be a significant correction in the vicinity of 30%. And alas, that's exactly what happened. You had the inauguration day, check out your candles, huge bar up, candle up, and then massive selling came into that market. Might not look like it on that single day, but when you zoom out, you're at the top, all-time high prices, huge buying, and then huge selling came into the market. Check out the volume. You had pretty significant volume, some of the highest volume going all the way back to the breakout, and then it just got sold off from that point. That's why I heavily stress that if we were to see a move higher from here, my argument is that there is not enough time elapsed for consolidation and accumulation for Bitcoin, basically to rid all of the sellers, enough of the sellers to go. That's what the bulls need. That's what obviously we're all hoping for if we're going to see higher prices. All of those sellers have got to go, and then that gives us that time and that strength to move higher. Now, if it happens from this point, as I said with my argument, is that we'll likely see short-lived moves and then pretty quick moves back down, which happens basically every single time you see it with a commodity. That's the reason for it. Huge moves higher. There's not enough time to accumulate. Sellers are still present, and on that buying spree, they sell off hard into the news, into the price appreciation, and it happens over and over again. That's one of the examples for Bitcoin, and there's a fantastic example on Solana on that same day, the Trump inauguration. Same sort of thing, just less liquidity in the market. Huge move higher. Saturday 18th, of course, markets are open there. Sunday 19th, Trump launches a meme coin, huge sell-off. And that basically marked the all-time high for Solana back in January of 2025. In regards to Bitcoin, we can see with the exchange volume here, which is the point I was making, we haven't seen that lifeblood come back into the market and give us the signals that we need to see in order for the markets to move higher. You can see that there's continued to be lower highs, lower lows. And that happened throughout the entirety of the last cycle, 2021, 2022 bear market, and finally started to get a bit of a base here, and the trend really did consolidate before you saw the breakout. And that's the good news breakout there. Yes, price was appreciating here, but you get a follow through of that bull market with the confirmation of the liquidity returning to Bitcoin. What if we were to see further downside here? Where could the prices drop to? Well, we obviously have to wait to see if we get the rejection, but overall, from a monthly chart, from a long-term perspective, high time frame, things are still looking very, very weak. There's been no closes yet. We've got 2 days to go for the April month. Volume is dropping off. The price here has not gotten back above the prior swing lows bodies of those candles. You got March 2025 closing at 82,500. Obviously, April's going to open up similar price, 82.5. You got February closing at 84,500. So it's got a bit of work to do over the next 2 days. Not impossible, but if it was to get back to those bodies of the candle, you're looking at in the vicinity of 10%. So it's not impossible for Bitcoin to do this, but it's just looking a little unlikely. Get to the bottom of the bar, you got $6,000 to move from here, 8%. Now, I bring those up because the mid-80s is still a good level for Bitcoin to reach, but not confirm a change in trend. Look at where the 200-day moving average is. So we bring everything full circle, looking at how markets, Bitcoin in particular, all of it's fallen off a cliff. And where does it go from here? Can it get to 82? Sure, it could break out, hit 82. As you can see, with the 200-day continues to decline over about $200 every day or so. So 2 days to go. The last reading is at 84,400. 2 more days would take it to exactly 84. You could see the price spike there and potentially get rejected. But anyway, point being is we see it, the price spike, but still not be in a position of strength overall, as you've got the 200-day above, the previous lows at 85,000, and then the swing top at 98,000. There's just so much overhead resistance here, and the market still has a lot to do to prove that it's going to be in a position of strength come that transition for the bull market. So we've covered the sentiment, looking at the search volume. The other part to the sentiment is, of course, the crypto fear and greed index. Let's bring that up. And it is in a transitional phase. We've got extreme fear and fear. We haven't turned into the neutral and greed just yet, but it looks like it's in the transitional phase, similar to what happened in 2022, but prices still went lower at that point. So the good news, and then you've been waiting for some good news, is that we could be coming to the end of the whole movement. It's just going to take that extra bit of time. And if you've got the patience, I think stick it out to Q3 and see where the dust settles for Bitcoin and Bitcoin's price after Q2, which hasn't so far proven too much apart from a minor relief rally, which had to be expected after 1, 2, 3, 4, 5 red months, utter collapse in price of $66,000, 52%. And that leads us to the next point, which is Bitcoin closing under 50%, which was my forecast on December 31st, 2025. So coming up to 4 months ago now, as we almost close out April, I'm watching for a low around Q3, then possibly a rally into Q4. If 50%, which is at $71,000, holds, then a good chance of a new all-time high. But it didn't hold. Therefore, we will trade under 50K only if the 50% level is broken. And it has been broken. 50%, that was the total range from the cycle low. So this is November up to the highs. There you go, 70,800, 71, call it that. We've had 2 closes underneath there. It looks like April will potentially close just above it. But, I'd say from this point that even if it were to close above the 50%, I still think there's a high chance that we'll see prices just under 50K. My target was around 30 to 50. I think I'm looking a little more so around 40 to 55K. Lows coming in, highs coming in, a bit of an area to test around this zone here. So you can see on the chart around that yellow, you've got 2022 highs, you've got ETF highs back in January of 24, August 2024 lows, that was the Japanese yen carry trade fears, and of course the 60K low, which is the current low of this bear market cycle. So if we were to get to that point, that would still be a fantastic area for a base to begin to form, which would be a 50% extension of the entire downtrend. Now that's not a perfect level, and those who look at the 50%, you'll understand why, but just looking at this as an extraction of the price ranges, somewhere in that 40 to 55K level looks to be a good area, especially with the resistance that we see in the history for Bitcoin. So all of this is still coming to fruition. It's all played out relatively well so far. Altcoins for 2026, just a quick recap, all of those have played out, and I think we probably still have further to go. We've seen it on the total 3, excluding stablecoins, trading much lower. And then the ratios of cryptos against Bitcoin have also continued lower as well, which suggests there's still not that much strength left in the crypto charts. But I've got a little more on Bitcoin. I want to cover the stock market at this point. Just have a look at how things are playing out in the risk on assets and where some of this liquidity may be moving to, while Bitcoin and cryptos are not doing so well. Obviously, the lifeblood of the game is in the stock markets and in real estate. That's where the majority of the world's wealth is. Therefore, well, we have to pay attention to it. So a quick look at the sentiment for the stock market as it trades around all-time highs. Barely moved over the last 11 days after it broke out on February 17th here. You had a couple of days above and then this nice big bar. Hasn't really moved in the last 11 days. But the sentiment survey shows that 46% of members, and this report, they've been conducting this sentiment survey for nearly 40 years, is showing 46% bullish. Now, normally this is a very, very good contrarian indicator. When these members of the AAII get very bullish over the next 6 months, it has marked tops. But that's only a signal once the market has continued to run. So we've seen it run for a considerable amount of time. There's several metrics on this. Some look at the moving average of the sentiment survey as well. Not to get too technical with it, when you see this bullish result after X amount of days on the moving average, generally it's a sign that you're near a high. Look at the last time it happened. 1 year bullish high, 49.5%. Week ending January 14th, that was basically the top. There's January 28th, there's January 13th. So the survey was conducted through this period here, and they called the exact top. They're the most bullish they've been in the last 12 months at the dead high of the time. Now, from that point, it declined 10 or so percent on the futures market. And of course, we've seen the bounce since then. Now, they're bullish again. But I think we're getting into this point of complacency towards the highs. Can the highs keep running? Yes, but we've begun to see breakdowns across the board and inflation continue to rise. We're seeing that with commodities as well in regards to things that we consume. Wheat's been absolutely gangbusters, going higher, pushing higher today. Corn's been up, soybeans been up. You need all these sort of agricultural products to feed to other livestock, and cotton's also been running really, really hard. So all of these soft agricultures have been doing very, very well. What has this got to do with Bitcoin? Well, I think the market is suggesting they're not as interested in speculative tech stuff as they are with hard, real assets. Obviously, oil is the main one that people can grasp. You need oil. We need oil to run absolutely everything. And like we've found out in the last couple of months, we also need it to produce fertilizer to then go and plant these crops and harvest the crops and do what we need to do with all of these crops so that we can live our lives, be fed and clothed and whatever else we do with cotton. So I think the market is suggesting something here, that they're getting a little sick and tired of speculative assets, unfortunately for us that enjoy trading Bitcoin, and they're moving more towards harder assets. What about gold and silver? Well, I think after this huge blow off top that we've covered for months after the breakout, and before that, of course, but in particular, the breakout that we tracked in silver, June 2025, publicly doing videos on it, I think we may have seen this blow off top for gold and silver. Gold, jury's still out a little bit here, whether it's going to hold up and then eventually push higher, but silver continues to underperform and putting in lower highs after lower highs, lower lows at the moment. Should it break down from 61 to 67, I think we're probably going more towards the mid 50s. And that was the analysis that I've shared with you all the way into the peak and, of course, after the peak. So this is all done beforehand, that when we get to these highs, there's often a 4-month period of the market deciding, is it ready to continue or are we going to break down? 2008, 4 months after the high, lower high, broke down. 2006, 4 months after the high, lower high, turned into a higher low. So some more strength there, but it required more time to consolidate. It wasn't just going to run straight after that 4 months. Took about 18 months to get the first breakout, and then 2 more months after that to run to that next leg. That's 2006. Now for 2004, you had 4 months into this lower high, higher low formed, and then it consolidated for a period of 19 months. So a very similar time frame to what it did in 2006. 2008 took a little longer before it could break out into that final high. Then 4 months here broke down, and we didn't see a new all-time high until, well, very, very recently, about 6 months ago, when it broke the 15-year-old high at the time. As for gold, similar deal, but we're looking at around 19 months. So basically, from this high for gold, an approximate year and a half to consolidate and then give us the answer, is it going to break out or break down? Within that time, it's possible that we're still going to see the stock market climb higher while gold goes on its merry way to consolidate, and then we'll get some more answers. I'm calling it around mid-2027, and we've seen that across history as we compare the S&P 500 to gold as well. Now, obviously Bitcoin is a big one that we love to discuss, but we can't only discuss Bitcoin without looking at the rest of the markets. And through this period, as we run into the peak of the 18-year cycle, here it is. Typically, you'll see the real estate top first, then the stock market, and often gold will top slightly before stocks, and then if it has more strength, it'll top after it. That's what we saw in 2008, 2011. Remember, gold topped in 2008, as we just saw, pulled back with stocks, and then started to run with stocks into 2011. So stocks bottomed in March 2009, right around this higher low for gold, and then stocks also ran at the same time after that low. So this is the difficulty of navigating the peak of the 18-year cycle. I've created a mini course on that, 3 parts, links in the top of the video description. Looks like this. Hit the free report, and you'll also get the reports plus the mini course as well. This is for the 18-year cycle, so you can get up to date with how the cycle evolves through the peak and then the correction. Remember, we're looking at something like this, the navigating the stage 5 into stage 6. So get up to date with that. There's a link in the top of the video description. Now, in regards to SPX against gold, last cycle, we saw a rally here. So this is in the white line, looking at the strength of the stock market against gold. It rallied while gold also consolidated. So you got some orange here. This is the gold price. Blue is the S&P. White is crossing the 2 over. So they were both rallying together, S&P a little more so than gold. Gold had already gone on a pretty big run, which dumped the S&P 500. Well, the ratio of the S&P 500, even though the S&P was also climbing. So towards the peak, we're seeing the price here of the S&P also increase. Gold may consolidate, which then shows up on the ratio of basically sideways and a bit of a bounce before ultimately correcting if things are going to repeat. All right, what are we seeing now? Well, we're seeing gold sideways after a very, very significant move. S&P 500 increasing, which then shows that the ratio is also bouncing from this point, but doesn't mean that it's in a place of absolute strength, especially after a macro lower high that has continued. Well, that has basically formed since the S&P 500 top in 2021, 2022. So some weakness overall, especially with these lows coming through. And Bitcoin wrapping it all together. Bitcoin off a cliff here with silver, Bitcoin off a cliff with gold, and they've all found support at roughly the same price. Bitcoin against the S&P 500, also coming off a cliff here, trying to bounce at the moment. But I think ultimately these charts haven't found a low yet, and we'll look to the next levels for a low of Bitcoin against the metals, against the S&P 500, weigh it all together when it comes to the liquidity, when it comes to the search volume, when it comes to the sentiment, putting it all together so we can look for that potential low accumulation and watch for any sort of breakouts towards, I guess, the absolute final stages of the S&P 500. Link in the top of the video description. Make sure you've liked and subscribe to the channel. I'll see you guys back at the next video. Thank you very much for your comments on the second channel, the Investor Accelerator, where I'm putting out content on the economy and bringing some more data together in a different fashion to just looking at charts. So much appreciated. Links in the video description for that too. I'll see you guys back at the next video. Until then, take care. Peace out.